Good morning, everyone, and welcome to the European crossover webinar. And we are seeing the euro make a run here just now, trying to make this press to see if we can get to these highs. It looked like we may have taken a little bit of a pause yesterday, and maybe that would have opened us to open the market for us to move a little bit lower. Although the door was still open for us to make a move up in here, but look like they might just get tired and kind of roll back. So we've just gone and pushed up here in the euro. We're here at 1984 on the cash. One of the things I did want to go and touch in is, remember yesterday we spent that time kind of focusing on the profile. And I want to do that, just that, is that since we kind of gave an idea what it was or how I kind of look at it, now I'm going to do that now, look at it right now for where are we now with the euro, and also what would be the expectations with the Nasdaq? Not necessarily expectations, but what would we be looking at to figure out, if you looked at the profile, where market would go to if we're going to break lower. So let's go and move into that quickly as we take a look at the euro. And you can see here in the futures, we've got the 60 right here on the 5 minute and the 60 on the 2 hour. And right now the euro, the cash is at 1987, and the futures at 1998. So basically now it's only about an 11 pip difference. Looks like the cash is like almost like as if it's stuck here at 1986, but the futures is trading at 1997 and a half or 1997. So basically now it's the spread has dropped down to almost 11, let's call it about 11 pips at this point. It's actually acting fairly quiet. Let me take a look here on the cash. It's actually, I'm showing the cash here at it's not showing that. On my cash thing, it's showing 1982, but I'm for some reason in the well, it does. You can see here it's reflecting right here at 1982. Well, I can't. I'm looking on the chart, but on the quote sheet, it's giving me something completely like as if it's stuck at 1986. But right now I'm looking at it's 1983, and the cash is traded 1999. So it is a 16 pip premium, just like it was yesterday. So I'd have to pull up the chart to go back and trade, but for some reason the quote screen isn't showing that or making that change. Okay, so that being said, let's go and take a look where we stand here with the euro. And once again, it is still traded at that 16 tick premium. We'll take a look at the 2 hour chart, and we're back up here challenging against this 50% here. Remember, 16 tick premium, so cash would then be of 1997, cash would be 1981. So we're at that 50% area here, and we're going to pull up the profile here. You can see where we're at, and this profile, as opposed to, as I told you, regular trading hours, I have the profile for the futures, but for the FX, so that it trades, from the electronic session all the way through. So this is actually today's profile right now. You can see that the point of control, or developing point of control, is right here at 1984. Once again, you take off 16 pips, you're looking at essentially was at 1968. So that would be your point of control if you look at the cash. But we are pressing up higher. But we talked about this, and you can see it more clearly now. You can see the prior days point of control right in here. You can see here. And so as the market moved higher, one of the things that we talked about, and that's why I thought the euro was going to have some tough times. This was a couple of days ago, because we'd come up all the way up to these point of controls, and really all we had was a bunch of, you want to call it maybe shadows or just ranges. So once again, like I said, if we go in and pull this back, where are we going to be able to go to? And when I looked at this going further out, let's pull this up, and you can see right now that the cash is at 1997. It's giving you the price right there. And not the cash, but the future. So it's going to the cash is traded at 19. Right now, I'm looking at 1982. So I looked up in here. I thought, you know what? The closest one is here is 1988 up in here, and really all these are just, for lack of a better phrase, let's just call it shadows, or it's actually the upper part of the range. And you can see that there was some volume in here, but most of this is way up here, like just stretches. So I thought, hey, look, if the market does make a spike, that's probably going to be all she wrote. We could maybe hang around a little bit, but eventually we're going to have to end up correcting, because a lot of this volume was way down in here, and the market did struggle. And we did see initially, even last week, run up in the cash. I think it was at 1928, and then we saw the market pull back. Then we reasserted ourselves, and here we are pressing up again. And the last much higher point of control I had, because I'm trying to look for confluences, was this 1982, 1988, which would have left us at 1972. But you can see the rest of these up in here is just where the market takes off. Some are kind of thin because they're hardly not too much volume, and still a little bit up in here. So I thought, okay, maybe they can still make that one run. We are still seeing right now the cash is at 1982. So that was the way that I thought when I was looking at it, where the market may run out of gas. Because remember, we had all these points of control, but once we got up in here, what was the market really going to be able to go in and do? And that's the way I was making a determination when I used not only the point of control, but I also used the prior day's value range. And this probably shows a lot more clearly when I was using an example yesterday. You can see the entire range in here. Boy, it was, remember yesterday, it was a very tight range. That's why you're not seeing this all like some of these other ones. Let's go and pull this back. And still even the ranges have been tighter, but yesterday it was very, very tight. But you can see here that it works like a bell curve. You see that? It moves here, okay? And the point of control yesterday was at 19, like right there at 1990, think of it basically 1990, take off 16 pips, push it at 1973. That's where the most volume was trading basically on the cash at 1973. I'm looking at the futures. So we made a push up and hard, and here's where we're trading right now. You can see right there on the futures at 1999, the cash is trading right now at 1985. So we try to make this push, and as I said, you can take a look here at yesterday's point of control. I think right here is at 1990. So as the market try to get above this, you're probably going to see a little bit of a maybe a pushback, and you can see here that most of this range throughout the session has been down here. This is the value range, and you can see that's going to be basically 3070. You can see as the market goes, it starts getting really thin up in here. You can see here, this run up in here, really get it pretty thin up in here. So maybe we make that run up. Maybe we can goose these markets a little bit higher. But as I said, when I look up in here, the market profile is not a predictive tool, but when I look up in here, I'm thinking, well, where am I going to go in and find anything left? Well, once we get up in this range, look in here. This is where the futures are trading. Once again, take off 16 ticks. You're talking about 1981. I'm showing cash is 1982. So it's just up in here. The last bastion of point of control was right in here. So can we make a run up here? Yeah, we can. It's a little bit more thin. Now, if the market were to get above that, then just like an auction, it'd have to push the prices much higher. But that's what I'm saying. I think maybe we can make that run up in here. We may stay a little bit here because you can hardly tell, but there's a little bit of volume like that as the curve goes like here and a little bit here, but pretty much not that much. So if maybe we could make that run up in here. As I said, from March, I've got here is notated as March 10th to the 17th. We got these little range highs up in here. So let's go in and convert this back down. There we go. And there we are, today's profile. And there's yesterday's action. And lots of times as the market moves higher, I'm going to be looking at different areas I can go to. Maybe yesterday's value area high is going to be where they'll offer some resistance. So I'm going to go on and we'll go on and quickly move into the analysis. And you can see where we are. And that's what I'm referencing here. You see here, this is where all the volume was at. Remember I told you the point of controls, and look what the market did. It went up there and it had trouble. It just kept dipping back. So if you were long, this was good places to initially take profits, because once we got to these point of controls, the market was pushing it back here. And sure enough, that's what's happened. We pull back. Now we're getting here. Can we get a spike up in here? Yeah, and it might stay there because it's a Friday for a day or so. But my thinking is that we may end up just kind of running out of gas, and then we dip back. But once again, that gives us an idea what may happen, and we're going to get into the analysis. So now let's just go and take a look at the Nasdaq, and this is once again how we'd use that. So with the Nasdaq, we saw this brush into new highs. You can see right here, the market looked like it was open to pulling back. Maybe we were finally going to go and get a pause. And you can see here from not yesterday, but from the day before, you saw this. But with the interest rates that went lower, it pushed this market up. I mean, pushed the indices all up. We saw gold with the strong move yesterday. So kind of flipped the script, as I mentioned there in the chat room. So when I'm looking here, and remember the profile that we use in the indices, I just have it in RTH, regular trading hours, which is going to be 9:30 Eastern to 4 p.m. So we're looking here, and this was yesterday's action right there. Okay, so we can go and pull this out. Let's pull this out a little bit. And there's yesterday's action right here. You see here, and you can see the point of control was right there at 14,004. We do know that the market had got up as high as basically, let's see, at the end of the day, we were up there at 14,035. We're kind of pulling back right now. So now this profile is yesterday's profile. It's not going to start again until, once again, it's RTH 9:30 Eastern to 4. But where would this market be going down to for support? So one of the things that we would have gone and looked at if the market was going to go on a pair back, because this would be the new trading on this side right here. Think of it as we're in a new profile. We're not yet. So I'm looking down here and saying, well, if this thing is selling off, where's it going to go to? Because it was above, remember when we closed, we were above 14,000. One of the areas I would have looked at is, you see right there, the value area. Here's the value area high. Here's the value area low. So what I would have done here is like come over here. And I'm going to go on and mark off this value area. Right there. That's the value area low. And for me, I like to make it a little bit, makes it easier for me. I just colored in there with a gray. And then I'm going to put in here value area low, VAL, and it was, I think it's 13,966. I can make sure though. Let's see right here. One I wanted to show on the right hand side. Now you don't have to mark these off, but you can see right here, 13,966. Well, lo and behold, you can see here, the market had a pretty good little pullback. I mean, look where it was in Asia. It was here at 14,030, okay? As we start to pull back. Now, it doesn't catch it exactly, but look, where's it stop? 13,952. Now, that's the all the way to the very stretch, the bottom, okay? But this gave me an idea, as I told you, as the market broke lower, where can it go to find value? Well, first thing is probably going to be if they keep on breaking lower. I like that 13,966. So you know what? We're breaking this area. Let me pull this back. So we're breaking down. This market's breaking down. We saw the SPOOs breaking down too. We'll go to switch to that. Wow, I think I'm going to get short because they're breaking that, and I talked about that, 13,993. You know what? I'm going to get short here. We got this little break in here. I'm going to get short, and I'll stay short. Where do I think they're going to go in and find value, at least initially? So if I play that short move as we break, let's say from here's this point of control. I'm like, you know what? Now I'm just going to get short there. Then I can look and say, you know what? I'll look to go on and cover as we make a stab to this 13,966. And sure enough, that's where they end up going to. They drop down here. They did exceed it by a whopping 14 ticks. But the point is that it gave you an area to look for value. And essentially, that's exactly how I use the profile then. I mean, I'm going to look at the point of control. And if this market would go on and break lower, let's say we come into today's session and we really start to go and break lower, then I'll probably look at yesterday's opening, yesterday's range right in here, range session low, which is 13,923, and that would actually happen to go on in confluence with the prior day's range value area low. High here also. Here's the value area high on this day, and I'm going to come over here and duplicate, and I'm going to go and put that one here, which is 13,931. So come over here, value area high, 931. So if the market were to go and start to break lower, this morning we open under pressure. The market's open up, it's a dilly-dallying around here. I might say, okay, well, resistance probably might be right there at yesterday's point of control here. Maybe we push up a little bit higher. So the market opens up, it's kind of struggling. It starts going to break lower. So it's breaking through. And I go, where's the next area where I think that they might go in and find value, okay, that the market may going to go to? Well, I'm thinking, okay, well, here's yesterday's low for the session, 13,923, and the prior day's value area high was 13,931, and there's a point of control right there, right here at 13,919. So I'd be looking at this area here. So if the market breaks lower, I'd be looking at this market to probably push all the way down here to this 1920, 1930-ish. I've got a triple confluence, at least the way I'm looking at the day session low, which is at 13,922. I'm looking at the prior day, the day before that, its value area high, 13,931. And then also the day before that, the point of control, the most volume that was traded, we'll go and pull this out. The market spent the most time right there at 13,919. You see, so that gives me an idea where this market, if it wants to break lower, let's say we got short or we saw the market break down at 14,000, say, man, this thing is going lower. Let's just go and get short. Where is this market going to go for value? Well, okay, let's go and go with the value area low for right here. So 13,966, the market did bottom at 13,952 and it started, moving back away from that area. Found value, the market starts pushing back up the auction. We open up, like I told you this morning we open up, maybe we're dilly-dallying around here and people going, wow, they really did stop those people out. Well, you know what, I'm going to get short. I'm not going to get my stop taken out this time. Where do I come in? Well, I'm going to look at yesterday's point of control and in yesterday's value area high. So maybe I get in short, or some people get short. Where's this market going to go to? Well, maybe we do find some support in here, but if we break, my guess is we're heading lower. And where are we going to go? Like I said, we look for an area of confluence. At least that's the way I look at it. And I look at yesterday's session low was 13,923. The prior day's value area high. Here's the value area. Between it's basically 1.5 standard deviation. So it's the 30%, the 70%. Okay. So 70% right there came in at 13,931. Remember, yesterday's session low was 13,923. And then we got the point of control from there. The most amount of trading was done there at 13,926. You know what? That sounds like a target to me. Doesn't mean it may get there. And if it does get there, you might cover. And if you still were right in a position, if it broke lower, then we'd probably more likely be heading to the prior day's point of control, which would be 13,886. So I hope that kind of helps explain the way I use it. I know yesterday's, when we first took a look at the profile, it seemed like it's a little bit convoluted. We'll go on and go over this again. So here's where the market opened yesterday at 9:30 Eastern, okay? And then remember I told you the first two bars and the first two areas. So because this is set up as 30 minutes. So the initial balance is going to be the first 30 minutes, which is essentially the first hour. So you can see the market opens up in here at 13,929. It dips down here to 922, and you see it's all ones because that's the first 30 minutes. 1, 1, 1, 1, 1. The market's just pushing apart. Doesn't mean it didn't go dip in here, but it's going like this. Okay, it's going up here, and at the top of the first half hour at 10 a.m. Eastern, the market was right up in here. It was actually at there, 13,977. You can see where the twos take off. They start to take off here, but then look, the market right here got up in here. It dipped back. You see 2, 2, 2, 2, 2. We start pulling all the way back again here. The market rebounds, and then the market kicks up into the 2. So there's the initial balance area, the first hour. And then the threes took over. We come back down here, the threes, and now we start moving up higher. So when you get used to this, you can actually see how the market is playing out by just watching this and looking, okay, now I can see where then the market traded down to the fours. We even traded down here, and then the market came back up right here to the fours, pushed here. We started to run out of gas. We came back down, and then the market kicks over into the fives. And we do a little bit right here. eventually the market, like I said, we had this run up here much later. But the point is that's the way I'll be trading today. And when the market broke lower, that's what I'd have been looking for. 13,966 is the market pushed lower. And remember, we talked about how important that 13,993 was. So when the market broke below that, remember, there's that 13,993. So as the market broke lower, that's what the market would have been likely. Doesn't mean it stops there. It's not a predictive tool. Was where the next value area is going to be 13,966. So those are the references I talk about. And if the market does press lower tomorrow, I mean, this morning, and maybe if we open up, let's say we open up around 13,950, as the market presses up higher, the market's going to find resistance here because the most amount of value traded yesterday on the point of control was at 14,004. So you're probably going to see people want to take, possibly, depending on what the circumstances, you may see people, they may take shorts, or you'll see people that are long, they'll say, I'll take out, lay off some of my position. If the market does start to roll back, we come back here, we break lower, then this is in all likelihood where the market is going to come to for value. You see what I'm saying? You got a little bit of a triple confluence here. As I said before, session low yesterday, 13,923. The previous day's value area high, 13,931. And the day before that, the point of control, which is really key, is going to be at 13,920. So if you go on, or actually it's right there at 13,920. Yeah. So I'd be looking for this area for them to market target. So if we break here, then we'll probably see some coverage. Doesn't mean we turn around and shoot back up. We might, but the market, if it has some momentum, it can shoot even further. And where's the next area? It'll be that prior day's point of control, which is 13,986. And that's probably where we'd find it. So anyway, enough of that. That's where we're at. And hopefully that goes in, partially explains it. So I wanted to touch base on that as kind of like a follow-up to that, and then that might help explain the way I use it. And I do these, the reason I mark these off is because then it helps me if the market's moving rather quickly. Once again, like I said, if I look in here, I've already had these saved up. Here's the profile on today's euro, and I have it where it runs all the way from the electronic session through, because there's so much trading in the European session. It's not going to do me any good if it's just trading RTA, regular trading hours, a US session. And when the profile was done, it was done back in, I think it's the late 80s or mid 80s. So we didn't have, you just had the, when they were focusing on the markets, we didn't have electronic markets at that time. So that's why they were based. But as I said, for the indices, I'll leave it that way. But for the future, for the Forex, I do want to go on in, and it's based on using the futures, but I want to have that so that it encompasses the European Open. You can see here, we're moving. You see that right there? The green dot is where we are right now, and you can see how the profile is. We traded the most of this bulk in here, the 70% was traded from right here, 1968. So been 1951 on the cash, 1952 on the cash to up here, 1985. So on the cash was going to be 69. Okay, so you can see now we're getting thin up in here. We're making this run up in here. We're making this push, and we're now at 120. So it's going to put us at 1985 in the cash. And as I said, we're above these point of control. So I'm thinking is that we're just going to go to possibly these ranges that I talked about. And here's those ranges. We'll leave it at that now. And here's on the 2-hour chart. And here's those ranges right here. And they've laid out as to what we can possibly go to. Because I was thinking we may go up there in a spike. And we may just kind of sit there a little bit. Maybe we'll kind of start to roll back. They have done a lot of work in here. Remember all those point of controls? We've done a lot of work. So if we were to break higher, then as I said, it's just an auction. We'd have to go much higher to find where sellers would be willing to get rid of their long positions. But right now, we've made it to the 50%. The key thing is we haven't paired back. It's the same thing that happened on the 38%. So if this market will get a leg up in here, wow, then we really were going to push up higher. Then we have to really push that to find better value. My thinking is, we'll find out, because it's yesterday kind of, like I said, throw a monkey wrench into the works. We might jump, if we jump in here, we'd be looking, but it's a Friday, the markets, the bulls are in control right now, or have been in control for the most part all week long. So we may just end up finishing this week. Remember I told you there was a little bit of volume. So maybe the start of next week, we might just sit here and then we start to roll back. But if we don't, wow, then it's just like an auction. You got to push higher now to get higher prices to find where the longs are be willing to let go of their position. Right now, the longs has been like, I'm in the driver's seat. Why should I exit? So we'll have to see what happens. But that's where we're at right now. If we did push above it, then we'd have to go much higher. That's the way I use a profile. We'd have to find, we had a lot of the point of controls here, and the market's still not being phased too much. It is dipping back, but it keeps coming back like a bouncing ball, like a ball in the water. So if that's the case, if we do come up in here and the market just doesn't want to give it, we'll have to go much higher to find value where longs can say, okay, I'll dump some of my position off. So anyway, that's the way I wanted to share and how we use it. So we're going to move into the analysis now. I just wanted to go on and share that kind of, to a certain extent, encompass what we did yesterday. So let me pull up the bias chart. So let's go and move into, so we're looking at the cash. There we go. So here's the cash. And let's go to the daily. I wanted to expand it. There we go. So the euro posted a spinning top doji on Thursday because we had very tight ranges. Resistance on Friday will be 1988 with support at 1927. So we've actually just about hit 1988. We got to, oh, we did. That was a high, 1988. But I kind of think we might push higher. We'll find out whether that happens or not. So 1988. I kept the 1927 because it certainly looked like it was still going to possibly move lower. And it didn't look like we were going to get that spike. That may happen, but at least for now, I've got 1988. Let's go move into the cable. And you can see the cable is pretty much a tight range also. So the cable paired back on Thursday with a doji. See that real quick. We did take a push higher, but we just couldn't fill the bill, and we paired back. Tight ranges abounded on Thursday. Friday's resistance will be 38.01 with support at 37.27. So what was the low so far? Oh, wow, 37.17. But we're popping back up. So let me go back again. It was 37.27, 38.01. Okay. Now, here's the deal. The same way I showed you how I use the profile for the whatchamacall, the euro, it's the same way I came up with those numbers here on the cable. And we talked about, I didn't think the cable would be able to add a whole lot more. And we did go and see that. Remember, because, you know, remember we even had the resistance at 38.08, 38.02, 38.08. And I thought this is it because remember, we had those, once again, those point of controls. I'm thinking, I don't think we can move too much higher, you know, because I had 38.02, remember I had 38.02.08. I just didn't see us moving much higher here. But it's kind of like with the euro, but the euro's tried to push a little bit higher. And sure enough, you see, some of those people did take the long, some of them didn't take all the position. And now you see that we've gone and sold off. Pretty good clip too, from 38 all the way down, 38.15. Nothing to sneeze at. But the point is now you can see how you can use the volume profile to help you go on and you know, see the, you know, because what's important is not only price, but the amount of volume that's trading, you know, because once again, you get this rally up here And it looks like, oh, this market, give an example like this one, the market rallied up, but it came down here. How much volume was actually trading here? That'll tell us a lot. So once again, just like the euro, a lot of this volume profile was coming in right there. That's why I thought this market's gonna have a hard time trying to get beyond that. And sure enough, that's exactly where the market ended up burning out of gas. Once again, it's not a predictive tool, but when you look at it, like, well, God, they might have a hard time trying to get beyond that. If they do get beyond it, it may not even get very much beyond it. Well, they didn't. They couldn't get even past the 38.0. Let me see, the high was 38.06. I think we had 38.02 and '08. That's what we had, 38.02 and '08. And there was a chance it could have got to 38.27, but just like the euro, it was really trying to really up in the thin air. And look what happened. So for some, I did notice, I don't know who it was, one guy, I don't know who it was, he exited out of his cable position. I think it might have been on that day. Right there at the top, he goes, I'm out. I remember I was sharing charts. So when yesterday, I guess it was day 4, and he goes, hey, I don't know why he exited, but he just said, I'm out. And he did a good job exiting there. So there we go. And I think Amanda, she took off part of her position there. But that's what I said. Using the volume profile made me believe that the market was going to have a tough time trying to get beyond 38.02.08. So enough of that. So let's go and move into the Australian dollar. The Aussie added on to gains with Thursday's action. Resistance for Friday will remain 77.58. You can see that right there, with support at 76.94. Okie dokie. Now let's move into the Dalian. So the Dalian had a subdued range as most of Forex did on Thursday. Resistance will be 922 with support at 856. On to the cash dollar index. So the dollar index, cash dollar index, held bias chart support of 91.51 on Thursday, which will remain support. Resistance will be, and I think it might have gotten a little bit below, but like I said, overall, I held it, it moved back up. Resistance will be 92.01. So it's not good. It's still going to be 91.51. And I don't know, I put 91.21. That's not right. That should have been, that would have been like the, oh, doggone it. I don't know what happened here. That'd have been like the market would have really broken down here. That didn't make any sense. Doggone it. I know I had 91.51. So what was my error? Doggone it. And 92.01. So the next one was Bitcoin. And we'll take a look at Bitcoin on the other chart. So Bitcoin posted a medium-legged doji on Thursday. We'll get to that. Let's switch into that chart. I actually do have it here on the daily too, right there. So it says Bitcoin posted a medium-legged doji on Thursday, suggesting we may see a pause in this recent run. Resistance will remain the intermediate target that we did hit. Remember, I had that intermediate target, and holy moly, I mean, that was, you couldn't get any closer than that. Look at that. Remember I said if it breaks above 61,300, which at the time was resistance, we're going to 64,775. Well, how do you like them apples? The high was 64,871. Can't get any too much doggone closer than that. So that was remember we talked about that 3 days ago because Irene had asked for us to take a look at that. And that was my intermediate target, 64,775. If we got above the 61,300, I was looking for 64,775, and the high was 64,871. Pretty doggone close. So resistance will remain. The intermediate target hit of 64,775 was supported 61,300. Remember, that had been resistance. So that's where I'm looking at. And look by that. We're at 61,376. And what's the low right now? 61,000. So once again, like I said, not bad. And stick with that. So now let's go move into the ES. So yesterday we had the resistance at 41.42, but I had mentioned some people had mentioned targets of 41.58. Well, I'll be doggone if we didn't get there yesterday. And it looked like that was going to allow the market to sit back then, but then because of interest rates, it propelled us higher, but then they got some shorts that were stuck and we ended up pushing it even higher. But you can see the market in Asia, we ended up dipping back here. So that 41.58, you can see is fairly critical. Let me see if I can do something here. Okay, there's the profile from yesterday in the E-mini. Okay, so you can see that the amount of right here is at we can pull it back, you can see it more clearly. There. So the point of control is at 41.56. So we'll see how the market, but we know the significance of 41.58. And you can see here how the market started pushing up here later on the day. We ended up we still finished up pretty strong though here, but this is where the market actually closed. The market closed right there. That's where the green dot is. This is where the market opened yesterday at 9:30 Eastern at 41.41, I think 41.42, and then the market dipped as low as 41.41 and a half. And for the first hour, because remember 11111, then we rotated lower, then we came back up in here. So the initial balance area was right there, 41.50. And so if you're looking for the market to come back for support, then we'd be looking at, as it broke lower, let's look at that initial balance area, which is 41.50, which it happens to confluence here with the value area low, 41.50. So as the market broke lower, look where the market went to. You see here, it got all the way down to 41.54. Now it's trading in a fairly tight range, but that gave you an idea. So once again, you'd say, well, look, this is where they're going to try and target 41.50 and a half. And look, the market got down to, in Asia, it was trading up in here, 41.64, and the market started breaking down. As it broke down, look exactly where it went to, 41.54. They tried to come a little bit lower again, they couldn't, so it popped up 41.54. That gave you a target there where the market may go to as it breaks lower. You see what I'm saying? So not bad if you look at this here. Look, you see, they're struggling in Asia, and you're like, okay, here's in Asia, it's struggling, it starts breaking down, you go, okay, where can this go to? Well, you look at yesterday's point of control. So if you're short here, you go, if you were going to ride it, okay, I'm going to take some off right before we get to the point of control. So you come over here and the market's breaking, and the point of control is 41.56. So you get right here at 56, you can see the market stopped right there, right around 41.56, and it bounces up to 41.60 and a quarter. Then we break lower again, and you're saying, I think I'll take the rest of it off, or I'll see how we get to it 41. You see right here, 50, because that's the initial balance high and happens to be the value area low here. So I'll look to see how we do at 41.50 and a half. The market breaks lower, and then it gets all the way down to 41.54. So it took out that low. When he suddenly got that bounce, it got to 41.55 and a half, 41.56. We rallied up about 3 handles. We come back lower, and you're saying, okay, let's see if we can break them down to 41.50. So it gets there. The market's kind of struggling. You're still below where you originally covered, but not much. You're like, I had enough of it. I'm just going to get out now. And then you can see the market rotates back up. And then it comes right back down again here. So that's what we'd be looking for. So just throw that out there. So when we're looking at it, resistance is going to be, let's let's go and take a look at this. 2H. I'll go with the close right there, the 2-hour close, and that's going to be 41.63. And support, oh, what if we do break a little bit lower? Well, that might be a little bit tough considering they kind of stopped out some people here. Probably not apt to rush in on a Friday when the whole trend's been going this way. You see what I'm saying? So if we do go and pull back, maybe they spook them a little bit. It's going to be right there, 41.42. But let's, just for a little bit of extra juice, we'll come down here. Seems like there's a lot more value at 41.37. Let's go and take a look at it, see if there is something there. Well, lo and behold, look at that. The prior day's point of control is right there at 41.37. You see what I'm telling you? You see? Now, that's the way I look at these, and I just try and look at the bodies and say, well, where's the most action? Okay, here. Well, generally, the market's going to stop. So it's going to take out, probably going to go and take out a few stops here. So let's see. There's some nice body touches right there at 41.37. Why I tell you the most volume is done at the body touches. So, I'm thinking, maybe I'll get some confluence. I go to the profile and look what the prior day, not yesterday's, but the prior day's point of control was at 41.37. So if this market breaks lower and continue to push, this is where you expect the market to target. So people, not only to target, people be saying, I'm going to look to cover some of my shorts. You might even have some people saying, I'm going to look to buy. Another person might say, I'm not only going to get short, I'm actually going to reverse and get long at that point at 41.37. Doesn't mean that we can't break a little bit lower, but that's what they'll be looking at to go on and cover right there. So you can see, makes a lot of sense. So if we do get spooked lower, I'll go with 41.37. And that's how I use the profile. Other people use it different. I just look for confluence. That's it. Confluence with here and here. And then of course I use my my opening ranges, because you can see this market, they'll trade back and forth with these opening ranges. Perfect example I could show you was on the Nasdaq. If you look in here, when we broke in Asia, look, we broke in Asia. Look what happened. We went to the opening. Now, that wasn't yesterday's. That was from the prior days, because yesterday's opening range was lower. But look where they went to. They went right to the opening range high, because there's the opening range. Okay. Now, this is the opening range in chocolate. It's the opening range from Wednesday, although there's yesterday, Thursday, but we took off. So where did the market go to? Look, it went right to the opening range and got to 13,989 and rallies to 14,014. As we come back, we test it again. As we break lower, where does the market go to? It goes all the way down to the bottom of the opening range. It tries to hold it, we break lower, but look, once we can't hold it, they start to cover it. And where do we rally? To the top of the opening range. They lay off the longs, they dip back, they try to get back. Oh no, we just can't get above it. So where do they go? Back towards the bottom of the opening range. So that's the way you can go and use that. That I use in conjunction with my other levels and in conjunction with market profile. So I hope that gives you a real good idea how I use it. So now let's go move into the Nasdaq. So we know with the Nasdaq, this 13,993 is really key. And if we were to go right there, 1393 it's like a pivot, okay? Right there. So once we got above here, you can see how the market danced around with this 13,993. It touched it, it even got below it, but it couldn't close it. Once we closed below it, now it started pushing lower. Hence why I told you about the 13,967 that we laid as an example. And now you can see the market rallies back up, but it's having a hell of a time trying to get beyond 13,993, because that's going to be resistance. Now, if we get a close above 13.93, it's going to open the door for us to go and push higher. A close meaning a 2-hour close. So for resistance, I am going to go with, if they do press higher, it would be right there, that body close, right there. It's called right there, 14,000. Call it 14,015. Now, resistance is here immediate, but if we do make a push higher in the morning, that's where I'd expect to find some resistance. Doesn't mean it's going to stop it, but that's what I'd expect to be the people to start to take some stock of where things are at. On the downside, if we do break lower, let's see. And we've been all over the place with Nasdaq. So let's take a look in here. Does look like 13,900, but now I'm going to look in here and see where we talked about that. Remember, we said if we break lower, 13, this is where I think the market would find value. That is true, I think, on a short-term basis. But if the market was continuing to press lower, I'd be going with the prior day's point of control, at least initially. And that's going to be 13,887. That is a long way down, but that would be right. You see here, there's 13,900. You see, so we overshoot a little bit, and that would put us right there. You see right there, that lower, 13,887. And that low there is 13,882. So I'm going to go with 13,887 in case it break them lower. And let's go to gold. This is a long, webinar. Okay, so gold took off. Hang on, we'll take a look at we'll take a look at the profile. Now the profile, I've got it regular trade hours. You can see gold here. That was another market that I didn't show yesterday, but that helped me figure out where markets were going to using the profile. Matter of fact, I came up with the 1722 from the prior day before as an area, and it turns out the low for the move was 1723. So here we are. We broke above in here. I'd have to come back much lower. One of the things was I think we broke down was actually at 1763 a couple of months ago, and then that's where we broke down. So I would have gone with that. Now, yesterday's point of control, the most the volume was trading was at 1767 and a half. We'd have to go way back in here to find out. Let's see here. There we go. So the market's trading at 1766 right now. Yeah. So look at the value. Look at the range high that day. Look at that. That was 1768. So I would have liked that area, and that was the initial balance high. This is from February 26th. And look at the prior day's session low was at 1767. And so I've got some confluence there. And then a lot of point of controls come in right here at the 1777. Right here. If you take an average, you'd probably come in around there at 1779. But you can see here, look at all these lower ranges here. They all come in around 1769-ish. You see, even the range here, the high was 1769. So when I look today, it's already had a pretty good run. I'll go with 1769 for support. Let's go back to where we're at now. Look at the point of control from April the 9th. That was at 1756. So I'm going to go with that. I'll go with 7 to the point of control from there. There's also the value area high, which is 1759, but I'll go with 1756. It's actually 1756.8, so let's call it 1757. And let's finally take a look at crude. Pretty good runs in here. Is there something we can see? Let's go 63.40. Okay, so the session high on March 18th was 63.92. Crude's high today is 63.88. You see how that works? That session high, this also happens to be the value area low there. So 63.91. So let's go with 63.90. Oh, look at this. You see how you can use that? Doesn't guarantee anything, but 63.90. Seems like we have nice confluence there. And what's today's high? 63.88. So now let's go all the way back here. Now, this is only going to be regular trading hours. So yesterday's high was 63.58. But you see how I went back to look at to see if I can see confluence. I've got confluence at 63.90 or 63.91. Now, if the market could push higher, then we'd have to go where those point of controls are. But we've had a pretty good run, so we'll go with 63.90. And now for support, well, yesterday's point of control was 63.29. The prior days were 63.11. And the initial balance high from yesterday, let's pull this out so we can look at that closer, was right there. See, there's the initial balance area, 62.99. So, and that point of control was 63.12. Let's see if we can find anything else here. Not really. This thing's probably pretty strong anyway. So I tell you what, we'll just go with the prior days, not yesterday, but the day before's point of control. And that's going to be 63.12. There you go. There's the bias chart. And there's how you use the market profile. There we go. Thanks for joining us here on the European Crossover webinar, and we'll see you in the chat room.